Well, I like to look at the impact of Brexit over the immediate term as well as the longer term. The immediate term impact is that the country is extremely divided. The people are divided in their opinion. The country, everyone is not in agreement. As a result, we see Britain as a country that's divided. Secondly, the current leadership is stepping down. And so there doesn't seem to be a clear successor of the current leadership, and so the political environment in the UK remains uncertain. And as a result, we are seeing the impact flow down immediately into the currency as well as the financial markets, which we are seeing extremely volatile situation. So there are two schools of thoughts. Currently, some people are thinking of making use of the opportunity to go in and pick up properties in London because of the currency, the drop in currency. However, we also see the banks limiting the loans, or some banks have actually stopped giving loans for properties in London. So the current situation for properties in London remains uncertain. Some of the investors who have invested in London, they are still evaluating the situation. They are not under pressure to sell yet, but they're keeping a close watch on the situation. So while there may be talks of mass exit from the London market, we have not yet seen that happen as yet. Well, secondly, the impact is over the longer term, because the Brexit is not expected to happen immediately, but over a number of years. So the impact will be seen likely over the next few years. What is going to happen? The immediate impact that we have to evaluate over the longer term is who is going to succeed the current leadership, and can this new leader unite an extremely divided country? So it all remains to be seen of what is the effectiveness of this new leader. Secondly, the transition. With the exit from the EU, it is a country and the economy is in transition. So will the exit be smooth, or will the exit be full of obstacles? So this will have impact on the economy and the situation going forward. If over the longer term there are more negatives than positives, we are likely to see the exit of major investors, the funds who are looking elsewhere for a safe haven to park and preserve their capital. So if this were to happen, we may see the transition of capital coming into safe havens like Singapore. Singapore is one of the several cities or countries that have been mentioned that could potentially benefit from the impact of Brexit. So for example, we can see funds coming to Singapore to pick up large investment projects. So for example, like commercial properties, hotels, and all that. These larger commercial investment sales may benefit from the impact of Brexit. Secondly, individual investors may also exit the London market to come to countries like Singapore to look for individual units of commercial properties where there are no restrictions for foreign ownership, or they may look at residential market where there is good buys because the property market prices have sort of stabilized over the last 11 quarters. Prices have come down significantly, and a lot of very good properties are actually at a very attractive price today. So Singapore market may stand to benefit over the longer term, but it all remains to be seen on the impact of the transition process.